Welcome to AXCAP Market Wrap, clear market news for everyday investors. This week had a bit of everything, some strong wins, some wobbles, and a few big signals about where money is heading next. We'll start in India, because that's where the energy was loudest. IRB Infrastructure landed a very large highways project worth about 9,270 crore. That's real roads, real tolls, real future income. The good mood spilled into the banks. The Nifty Bank and Bank Nifty kept setting fresh records, helped by names like Canara Bank, IDFC First, AU Small Finance, and Kotak Mahindra. The picture was simple. People there believe loans will keep growing, companies will keep building, and everyday activity is picking up as the year ends. Across the ocean, the tone in the United States was more cautious. The central bank shared notes from its last meeting and made it clear they aren't rushing into more rate cuts. Prices are still higher than they'd like in some areas, and the economy is still moving. That message made traders pay extra attention to every new number that came out. One of those numbers showed retail sales rising month to month. Americans are still buying, even with expensive credit. Good news for shop owners, but it also means the central bank can't relax too quickly. Europe had a quieter win. Softer inflation signs helped calm nerves, and major European shares edged up. Nothing dramatic, just a steady, we're okay kind of move. Asia told a different story. Japan and China slipped as people worried about slower growth in China and money flowing out of the region when US rates are high. In other words, not all regions are moving in the same direction right now. Commodities and crypto were mixed. Oil hovered in the high $70 after the OPEC Plus group kept output steady. That supported energy shares without putting too much pressure on motorists and transport. Gold pulled back at times but stayed popular whenever nerves rose. It's still the sleep-at-night asset for many. Bitcoin had a choppy few days, but money did come back into some Bitcoin ETFs later in the week, breaking a small losing streak. It was a reminder that interest is still there, just more careful. The big theme of the week was AI infrastructure. Two headlines matter here. First, NVIDIA and Microsoft said they plan to invest heavily together, up to $15 billion, and spend roughly $30 billion to grow Microsoft's cloud capacity. That's not a press release stunt. That's servers, power, cooling, networks, the actual backbone that makes AI work at scale. Second, in India, Tata Consultancy Services teamed up with TPG on a roughly 18,000 crore push into AI and sovereign data centers through Hypervault. Different continents, same message. The world isn't just talking about AI, it's building the factories for it. On everyday shopping, Walmart raised its outlook again. That matters because Walmart serves customers who watch prices closely. If Walmart is doing better, it usually means households are still spending on essentials but being smart about where they buy. That supports parts of retail even when budgets are tight. Back home in South Africa, there was welcome news. The Reserve Bank cut the repo rate by 0.25% to 6.75%. With better job numbers and a friendlier outlook on prices, this should make loans a little cheaper for homes, cars, small businesses, and give families a bit of breathing room heading into the holidays. Earlier in the week, the rand was quiet as traders waited for local data. Now the focus turns to how the currency, bonds, and rate-sensitive stocks react to this cut. If inflation keeps easing, that relief can last. Policymakers kept talking too. A senior U.S. central banker warned against cutting rates too soon, saying it could cause new problems. In plain terms, they'd rather move slowly than fix a mistake later. And in India, the Enforcement Directorate moved to attach assets linked to entities tied to the Reliance Group. It was a reminder that regulators are active, and big companies can face quick action. That kind of headline doesn't always move markets on the day, but it shapes how investors think about risk. Let's quickly touch on the day-to-day swings. The US had a rough patch where the Dow dropped more than 550 points, with the S&P 500 and NASDAQ also lower. Tech shares were the weak spot again as people questioned rich price tags. At the very same time, India kept cruising to new highs, powered by banks, autos, and healthcare. Europe crept higher on gentler inflation, and Asia cooled with the China worry. If it felt like watching two different movies at once, that's because it was. Strength in some places, hesitation in others. So what should we take from all of this? First, The AI build-out is real. When giants like Nvidia and Microsoft commit big money, and when TCS and TPG do the same in India, it shows where long-term investment is going, the pipes and power that make modern tech work. Prices will still swing, but the direction of spending is clear. Second, central banks prefer steady hands. The US won't rush into more cuts. South Africa felt comfortable enough to trim a little. Europe is enjoying slower price rises. None of this screams boom or bust. It says step by step. That's why every inflation number, jobs print, and business survey moved markets this week. Each one tilts the next step. Third, the shopper is still standing. Retail sales in the US rose. Walmart's outlook went up. In South Africa, lower rates can free up a bit of cash. Households are budgeting carefully, but they're still spending. Fourth, flows show quiet confidence. US equity funds saw money coming in for another week. It wasn't wild, but it was steady. Investors aren't blind to risks, they're just choosing their spots. And finally, not all regions are equal right now. India's banks and builders are getting love. Europe is on a slow mend. Asia is dealing with China's slowdown and strong US rates. It's fine to have different answers in different markets. That's being an investor, not a cheerleader. Our take for the week is simple. Lean into clear stories, AI infrastructure, value-focused retail, banks and builders in markets with strong pipelines like India. Keep position sizes sensible around big data days and central bank headlines. You don't have to swing hard to make progress. Prefer strong balance sheets and steady cash flows over big promises. In choppy waters, sturdy boats do better. For South African listeners, keep an eye on rate-sensitive shares, local bonds, and USD ZAR after the cut. If price pressures keep easing, that tailwind grows. Use oil and gold as weather checks. If oil stays steady and gold firms when nerves rise, it often means the market is cautious but still functioning. That's the week in plain English. Real projects breaking ground, AI factories getting funded, shoppers still showing up, and central banks keeping a steady hand. Not a straight line, but not a dead end either. That's all for now from Axe Capital. And remember, this is not financial advice.